So I am currently buying the New Zealand US dollar. Now, why would I be doing this? I've been on the US dollar bull train for so long. I've actually been calling US euro dollar shorts since back in September 2024. Now that's yielded amazing results. And right now, I am currently exposed to the US dollar quite largely. I've got US dollar Swiss longs on that you can see aren't doing very well. I've got Euro US dollar shorts on as well here that are currently in a little bit of drawdown. So what does that mean? Well, that gives me a lot of exposure to the US dollar, and I am betting pretty heavy that the US dollar is going to continue to the upside. So you can see here, the current situation on the US dollar doesn't look very convincing for the bulls at the moment. The overall uptrend is intact as far as I'm concerned. However, short term, we are moving to the downside quite aggressively. We can see we've broken through the recent level of structure. We did retest and we are now continuing to the downside. So the next level I'm really looking for now is this 1.05.5 level. And this was the next level of support really that makes sense to me. So now we've broken. This is really the next target. I mean, the other option obviously is the US dollar reverses from this level and continues to the upside. However, we've got a lot to account for. We've got Trump tariffs. We've got Trump also saying that he wants interest rates cut immediately. But along with that, we also have the Federal Reserve that isn't interested in cutting rates aggressively at this moment. They're actually looking to slow down the rate cuts. And it's like we're currently on a rate cut or projected to have a rate cut this month by the Fed as well. The rate cut after that is also quite highly expected to be a hold at this time. Obviously, we'll have to see how the data comes out. So my US dollar bullish idea isn't completely gone out of the window, but I want a little bit of a hedge, I guess you could say. I want to be able to be a bit more safe in my dollar positions. So that's why I've taken New Zealand dollar longs. Now, why would I take New Zealand dollar longs specifically? What was the reason for this one? Well, let's go ahead and have a look at the bank report by HSBC. So we can see the G10 FX trade idea, technically buy New Zealand US dollar. We open a buy New Zealand US dollar trade at 0.5706. Our target is 0.5910 with a stop at 0.563. Now you can see the rationale. Recent rhetoric from Trump administration on trade policy has been less aggressive than expected, particularly on China. Reuters reported that Trump would rather not have to use tariffs over China, 24th of January. This should leave room for markets to reduce policy-related premium in the US dollar in the near term. From the macro perspective, despite New Zealand's limited direct trade exposure with the US, the New Zealand dollar has one of the highest sensitivities to Asian emerging market FX and global ex-US equities among G10 currencies. Both should be key beneficiaries for a softer tone by Trump administration in the near term. There is a bit more to that report, but I'm not going to go into it too much. We do have the report in Elite Traders. We've also sent a signal for this trade. This isn't a signal to tell you to buy, by the way. This isn't financial advice. I don't do that. I'm not registered, licensed, or regulated to give you any sort of advice or signals. But this is a trade I'm currently in. Obviously, we like transparency on this page. But this isn't a trade that I particularly like, to be quite honest with you. I'm not 100% certain that this is a trade I would take if I, first of all, didn't have the HSBC report, and also if I didn't have US dollar long positions already, using this particular trade as just a hedge to minimize my risk. If the dollar does continue to plummet down to 1.5, I'm safe. At least my overall portfolio isn't going to take a hit necessarily to the P&L. So guys, that's it. It was a very quick video. I just wanted to show you a little bit of what goes on behind the scenes and how you can start to look to diversify your portfolio. You don't have to be incredibly smart or look at super complex details. For example, just to quickly break this down, I am bullish on the US dollar. However, we're currently having quite a bearish move. I want to be safe, so I'm copying an institutional position to reduce my risk. That's as simple as it can get. Now, do I think this trade will work out? I don't think it will. Now, I've taken very low risk on this position. I think the risk is something like 0.3%. Along those lines, it's very small. However, if it does work out, again, it's good. That's fine, because these positions are completely protected. By the way, this isn't my real position on euro dollar. This is just to sort of highlight my average price and my mental stop, mental take profit. This isn't a real position. And dollar Swiss, These are the real levels. This is what we've currently got going in the Discord, along with now this New Zealand US dollar position. So we're looking quite good actually. So into FOMC, we're completely fine. We're hedged either way, so we're good to go. Guys, again, this is it. Please like and subscribe if you have found any sort of value in this video. Also, you can join Elite Traders. We currently have 50% off for to celebrate our rebrand that we've done. We've completely relaunched the website, so please go and check that out. We've also got free research on there every week that you can go and read. Again, completely free. Every week, every Sunday, we upload global macro research for you. So guys, have a great day. I will see you very, very soon.